Hello and welcome to video number 3. This will be the second part of the discussion of depreciation. Okay, when we left off, we were on page 7.7 and 7.8. The table on page 7.8, is the accelerated depreciation for personal property table. Personal property under IRS law is known as section 1045 property, 1045 property. Okay, section 1045 property generally is depreciated using an accelerated method. Now, what exactly do we mean by accelerated? Well, let's go back and look at our example that we just did. On page 7.7. If you were using financial depreciation, you would depreciate the asset at an exact rate of 20% per year for 5 consecutive years. If you were using MACRS, though, the modified accelerated cost recovery system, you would depreciate the asset using 20% in the first year. Okay, we discussed that in the first video. And then take a look at page 7.8. You'll notice in the second year the depreciation rate is 32%, or 12% higher than you would normally have. Okay, the rate drops to 19.2 in year 3, to 11.52 in year 4, 11.52 in year 5, and then finally 5.76% in year 6. Okay, so an accelerated method is any method where the depreciation taken in the early years is greater than what it would have been taken under straight line. Now, you do not have to use MACRS if you don't want to. You can still use straight line depreciation to depreciate your assets if you choose to. That is table 7.3 on page 7.9. Okay, so let's take a look at our tables, on page 7.9, or 7-9. Look at the 5-year table again. Okay, this time, instead of taking 20% in the first year, we're only going to take 10%. And again, if you think about that, under normal financial accounting straight line, you would take 20% each year for 5 years. But because we have to use what is called a half-year convention, that was explained in the previous video, we are only going to take half of 20%, or 10%, in year 1. Go across that row in table 7-3, you'll see that we're going to take 20% each year in years 2, 3, 4, and 5, and then 10% in year 6. Okay, so again, it's always going to take one more year to depreciate the asset than its class life, as determined by you, depending upon what class life you pick for this asset. Okay, then we also have something called a mid-quarter convention. Now, a lot of times businesses, especially when they're on a calendar year basis, they get to the end of the year and they had budgeted for a certain amount of capital expenditures, and then they found out they still had some monies to play with, so they decide to buy a lot at the end of the year in order to meet their budget. Okay, well, the IRS knows this, and they're like, no, you're not going to buy a whole bunch of assets in December and then try to depreciate them back to July 1st. So they have something called a mid-quarter convention. Okay, so on page 7-9, look at 7-4A, mid-quarter convention. Okay, and then look at the second sentence in that paragraph. It says the mid-quarter convention must be applied if more than 40% of the total cost of the taxpayer's property acquired during the year other than real property is placed in service in the last 3 months of the year. So if you got a calendar year company, that would be if you had purchased more than 40% of your assets in October, November, and December. Again, luckily the tax software, assuming it's good tax software, will calculate this for you. Okay? So that's a mid-quarter convention. All right. Along with regular depreciation, all right, okay, remember that the idea here also is to try to get businesses to invest. All right, the more businesses invest, the more products that are sold, the more people stay employed. It's all good for the economy. All right, so along with regular depreciation, all right, we also have something called bonus depreciation. All right, now bonus depreciation, all right, allows you to take a 50% deduction of the cost of the asset in 2017 if you choose to do so. All right, now these rules tend to change year in and year out, so you've got to watch real close to see whether Congress allows certain things to sunset. Sunset means that it expires, or allows it to continue. Okay, and as far as I know, bonus depreciation is still on the books for 2018. Okay, so if you look at the table, all right, on page 7-11, you will note that we had a 50% bonus depreciation in 2017. So when you're given a quiz problem or you're given an exam problem, and it says that the taxpayer elected to take bonus depreciation, you would use the 50% rate. Okay. Now you can have bonus depreciation and regular depreciation on the same asset in the same year if you want to. The bonus depreciation is taken first, and then any remaining cost that has not yet been depreciated would be depreciated using the tables that you saw on page 7.8 and 7.9. Now this applies to personal property, not real property. All right. Okay. That will be the end of this video. In the next one we'll discuss real estate.